Doha Bank performance highlights first quarter 2021. The net profit is around 380 million, which is 17.3% up over the profit of 324 million 2020 first quarter. We have done 380 million, that is 17.3% up. Total assets stands at 112 billion, that is 5.4% up year on year, again 8.3% up for the year to date. Net loans and advances 71 billion, that is 8% up year on year, 8% up year to date. Customer deposits 64 billion, that is 16% up year on year and 16% year to date. Let us look at the key ratios. Return on shareholders' equity 13.6, return on average assets 1.41, cost income ratio 26.5, net interest income 2.51, specific provision coverage 59%, total provision coverage 13%, tier 1 ratio 18.5%, total CAR 19.7%, loan to deposit ratio 111%. Now, in terms of net interest income, it has grown by 21%. When it comes to operating income, net operating income, it is up by 10.5%. In spite of the fact, precautionary provision we have taken nearly 31% up over the last year. Our net profit is up by 17.3%. The earning per share in the first quarter is 0.12. So if you look at the last 3 years trend again, we moved from 307 to 324 to 380 profit trend. When it comes to provisioning also, we have scaled up on account of the COVID, and profit before impairment on loans, if you look at it, it has moved, that is 427 to 500 million to 611. When it comes to net impairment of loans, net after looking at the recoveries, it has moved from 120 to 176, and again 231 million. Operating income, net operating income has moved from 2.6 billion to 2.7 billion to 2.9 billion. So we have increasing revenue earnings throughout. Net operating income, if you look at the big picture, we are always on the ascending trend. Now, when it comes to cost income ratio, we are gradually bringing down from 35.7 to 30.8 to 26.5%. Total assets 112 billion, loans 71 billion, deposits 64 billion, equity stands at, including the current year profit for the first 3 months, 13.9 billion, let's say 14 billion, 958, that is almost 14 billion. Now, macro environment, government side, we have market share of 4.1%. Services side, we have 5.2%. Real estate 12%. General trade 7.5%. Consumption 4.9%. Contracting 13.8%. And again, industry 4%. So that's the level. Interbank comparison, if I look at it, we have other banks have done equally well, and our key ratios are very important in terms of the net interest income. We have done 21% up. That's very good. Interest expense, we are down by 51%. That's made a difference. Cost of fund, net fees and commission, we have scope for improvement. We have foreign exchange earnings, we have increased very well. Fees and commissions, we are down by 18.7%. And when it comes to investment income, we have a downturn. Negative reserves, no. Unlike a few other banks, we don't have negative reserves. Our currency translation or negative reserves is not there. It is positive now. General administrative expenses, we have come down by 5.4%. Return on shareholders' equity, 13.6%. Return on average assets, 1.41%. Cost income ratio, 26.5%. NPL stands at 5.67%. We have brought it down compared to the last year. Total provision coverage, because of the write-off, is nearly 86%. Specific provision coverage, 59%. Stage 2, 26.1%. From 27.6 last year, it has come to 26.1% compared to our peers in the higher side. And we have stage 2 loan coverage, if you look at it, 5.2%. Again, we have scope for improvement. And loan to deposit ratio, we have done reasonably well, 111%. Cost of risk is 1.36. We have come down. We have to still bring it down further. Net interest margin is high, 2.51%. Total CAR is high, CET is high. CET in line with the market, I should say. If you look at other banks, we are in par. That's the big picture as far as Doha Bank financial highlights are concerned. The bank is in the progressive growth, and definitely there are opportunities for us to further improve, and we will make sure our operating model with a very strong capital buffers, very strong de-risking in terms of public sector versus private sector. We are moving more towards public sector. Sectors like contract financing, we are minimizing the exposure, and we are also improving the asset allocation model. Cross-border, we have minimized it. So plenty of de-risking principles we have followed, and it is all paying true to the reflection we have shown in this quarter, a good performance track.